Hey, buddy, how we doing today? Tuesday. I'm so used to doing these on Mondays. It's Tuesday, June 1st, 2021. I am excited to be doing an entire week, a short week of our live trading sessions here at Tom's Trading Room, sponsored by Optionetics. Glad to have you guys in here with me. We got a lot to cover over the next 4 days. So again, like I said, it's awesome. Everybody's here on time. Welcome. I'm going to be putting this into 4 separate parts, and they will be recorded. We will get the recordings up for you as soon as possible afterwards. So very excited to get this thing going. Glad to have all you guys in here. It is going to be a very, very interesting month of June. Today, what I want to do is I've also got a free app that I'm going to be sharing with everybody as well. So free app, something we just got done. It just went hot last week, and we're making it free to everyone. And so we're excited to be sharing this with the YouTube community first. So guys, let's, without any further ado, let me go ahead and get started. So first thing I need to do is just a quick little bit of housekeeping here. This will obviously just take just a moment. This disclaimer on the screen, you can read it in its entirety. I'm not going to read it to you. I'm going to mention 2 quick things, though. Number 1, stock, options, and crypto trading has large potential rewards and also large potential risk. And number 2, I'm not an investment advisor, all right? Although I've been in the markets longer than I haven't, 30 years now, 30 plus years, all right? At this moment in time, I'm not an individual investment advisor. So I don't give personalized financial investment advice, right? I've done a lot of things in the trading community over the last several decades, but at this point, money manager is not one of them, all right? I manage my own money, I manage our family office, and I teach folks how to spot opportunities, create low-risk trades, and plan, exit, and manage those trades. So that's what we are going to be doing over the next 4 days, all right? So what's going on here? Well, for those of you who are new to the channel and new to myself, let me give you some background. 30-year veteran, stocks, options, commodities, currencies, cryptocurrencies. I was the co-founder of Optionetics. Many of you do know this, right? Some of you don't, all right? Optionetics was an options education leader that started back in the early 90s off the floor of the American Stock Exchange. I've done several books, probably about a half a dozen books that I've authored and co-authored on different various things in the market: stocks, indexes, volatility, options, CNBC, Bloomberg, Reuters, Fox Business, and more. I don't do a whole lot of those because, honestly, the area of interviewing has gotten to be more opinionated and less factual than ever before. So I don't, I've done a few things overseas. And when I talk about interviews, I do them overseas on the other side of the world because they're more technical, they're more factual, and I'm not one of 9 when you see, it looks like the Hollywood Squares or the Brady Bunch when you're doing interviews and you're barely able to get a word in. Also the founder and editor of TomGentile.com, Optionetics.com, and Tom'sOptionTools.com as well. Check those out in or on your leisure. But guys, I want to say something real quick to all of you that are here. And thank you to Jeff, John, Napoleon, Robert, and RP. Glad to have you guys here. And many, many of you that are coming into the room right now. Very exciting. We hit 20,000 subscribers over the weekend. So that was a very exciting milestone for us here on the YouTube channel. And we're very excited. We really started this thing a little bit more than a year ago. All right. I've had a YouTube channel for 7 years, just never really used it. But we opened it up and started putting education on our YouTube channel a little more than a year ago. And we grew from, I think it was less than 2,000 users. We were coming out of 2019 into 2020, and we hit the 20,000 mark. It's exciting to see that. I know this is a niche channel. All right. We're not out here talking about everything. All right. I'm definitely not going to tell you the best eyeliner to use, the best lipstick. That's not our channel. Our channel is very focused. And I'll talk a little bit about what we don't do inside the financial markets. But I do want to discuss also what we do here on this channel. This channel is absolutely free. And I want to let you guys know this. All of the proceeds that we've gotten this year, last year too, but all the proceeds that we are making on the channel through monetization, that all goes 100% of those profits go to various charities. And so we're excited about that. We donated to LBX Sports last week. We're also looking at making a donation to St. Jude's Medical. So each month we go in and we take a look at what we've monetized here on YouTube, doing live streams and videos, and we put that money back out to work in the community. So, those of you that donate to the channel, whether, you're watching the commercials, and I hate commercials as much as anybody does, but realize that those are going to a great cause. All right. Also, for those of you that don't know this, we do have Super Chat available. So Super Chat donations are accepted here on the channel, and all those proceeds too. All of this entire channel, all of our profits do go to charity. And so we'll talk about one, every month who we're dropping money to. And so we're excited about that, guys. So let's go ahead and pop forward. And I'm going to be talking about several different things today. And of course, next week, we're going to be getting into stock selection today. We're going to get into calls and puts, how to find cheap options and case studies. And I'm going to be giving you the link, or I'm going to show you how to find the new app that we just made as part of our suite of apps. So I'm going to give you that link, so you guys will be able to download this and get it activated today. And I'm actually going to use it today and tomorrow to show you how it is that we pick trades through something called cheap options and expensive options. So today it's all about calls, puts, selection, finding those cheap options. And I've got a couple case studies lined up. I got at least one today that's in the cheap option category. I'm going to show you how we go about finding that. So that's on tap for today. Tomorrow, we're going to get into a review of today. We're going to get into selling premium on expensive options with real-time case studies. All right. Part 3 will be a review and trading option spreads. And part 4, which will be at the end of the week, will be also a review and trading cryptocurrencies. And I've got a real-time lined up. I said I would never, ever trade Doge, but I'm going to show you, I'm going to go against this, because there's an interesting pattern that happens with every cryptocurrency that we've seen. And I'm going to wait. You're going to have to come back on Friday if you want to follow that pattern. And I'm actually going to go in and I'm going to show you, I'm letting you know now, I'm going to buy some Doge on Friday with the ability to actually sell it. All right. My plan is to buy Doge with a sell date at the end. I don't plan on holding this. I plan on getting out of it. And there is an event that's likely to happen that's going to give me that return. All right. We'll talk about that too. So I've got all 4 of these rely upon something that we do, which is rules-based trading. All right. Now let's talk about what we don't do here. For those of you that are new with us. All right. What do we not do in this room? All right. I do live streams every Monday at noon, but today I'm celebrating 20,000 plus subscribers. So I decided I'm going to do a live stream every single day this week. And we're also going to give you one of our best trading apps. And that is for you forever. All right. Free forever, that app. And it's a really good app. And I'll show you that a little bit later in the broadcast. But what do we not do? We don't trade on hope. We don't trade on fear. We don't trade on greed. We don't think our way to trades. All right. We let the trades come to us by virtue of something we call rules-based trading. And rules-based trading is that we're spotting opportunities, rules-based opportunities that we've back-tested over time. All right. Opportunities where patterns are positive. Now, it doesn't mean that there's a guarantee it's going to go forward. For instance, one of the opportunities we're going to look at today is something called the money calendar, but also creating low risk trades with calls and puts, and then plan, executing, and manage those trades. And what I'm going to do is I am going to take us from beginning to end and show you exactly how we do that process. And I will be going in and placing that order as well. And then I'm going to go in and I'm going to create the exit strategy. So I'm going to have everything all put together. And I plan on doing that in the course of today's live trade session, our Trading Essentials session, as well as part 2, part 3, part 4. Going to have all of those in place so you can see how the whole thing goes together. All right. So that's the plan. I'm going to be using Tom's option tools as part of this. For those of you that are brand new, you've never tried us out before, 2-week free trial. Check it out below in the description of our live stream. All right. So let's go ahead and move forward. So let's start off first about looking at the entire broad range of stocks. All right. I could do what everybody else is doing right now on their live streams. You know, I could go over here and we could look at AMC and we could look at GME and we could just get all emotional, buy calls, by the way, it's the worst thing you could do right now as an option trader is buy calls on GameStop or buy calls on GME with the idea, if you're going to buy them, you better be ready to sell them soon after. All right. That's the only thing I would look at on the buy side. But these, I mean, let's just take a look real quick. AMC's up 19% so far today. GME is up double digits as well, up almost 11%. All right. These things are going back to these historic highs. The fundamentalists can't stand these stocks. There's nothing in them that wants them to go in as investors. All right. But what's going on is there's short squeezes happening in these stocks. The problem is, as an option trader, you are overpaying for these options. I'm going to show you a strategy tomorrow that I will be putting on in at least one of these two stocks that has a higher probability than buying calls if you're bullish or buying puts if you're bearish. So I'll give you a rules-based trading approach to stocks like AMC and GME. But the one thing I will not be doing is going in here, getting all emotional and throwing money into an area that is purely on speculation, purely on hope, on fear, on greed, right? We're going to take a different rules-based approach. And I'm going to be using tomorrow's session for that. But I wanted to throw that at you because, again, it's not something we do. When you start out looking at the universe, and there are stocks right now that are giving us rules-based opportunities. When you look at the universe, the first thing you need to do is decide which ones you want to throw out. And there are thousands and thousands of stocks out there that we could trade from. I whittle those down to somewhere between the top 1% and 2% of all traded U.S. stocks. I'm not talking about stocks around the world. I'm just talking about the 1% to 2% of the stocks that trade right here in the U.S. And so the way I whittle those down are by looking at what's the most liquid in the market, right? Number 2, what kind of mobility does it have? And number 3, is it optionable, right? So we can take these 3 things in one area and really crank it down to those top 300, top 3 to 400 stocks, and even whittle it down from there. I mean, one of the easiest ways is just to simply go out there and trade the S&P 500. That'll bring you down from 4,000 optionables down to, let's say, 500. If you go with the OEX, you're talking about the top 100 optionable stocks. But are they the most liquid? Right. So I'm going to show you a way you can pull up the most liquid optionable stocks, and you can do it using something called MEAX. All right. So what we'll do is, the first thing I'm going to share with you is how to Google the options market liquidity. So if you go into Google and you type in this area here, type in options, just type in penny pilot list right here, penny pilot list. And what that does is that'll bring you up, and the very first search result that comes up on Google is going to say options penny pilot program, MIAX, MEAX, whatever you want to call it, right? You click on that, and that's going to take you to a list that is a shorter list of optionable stocks. All right. So let's go there right now. So I've already Googled penny pilot options list, and let me turn on the big toggle on the big mouse, and I'm going to click on options penny pilot. This is going to bring up the MEAX Penny Pilot Program. And so right here, I don't have to go any further. Just come down after the paragraph, and you can see right here, you've got a CXV of the MEAX Emerald Penny Pilot class list, or an Excel spreadsheet, whichever way you want to download that. If you click on this, it's going to download. And depending on what you use, I'm using Google Chrome as my browser. But if you use Safari, or you use Internet Explorer, or whatever you're using, there's going to be a way you can access this list after downloading it. Maybe you have to go to your downloads to get to it. But if I click on it, all right, it's going to allow me to come in and now open this list. And you can see it's right here. And so here's my list. And now I've got a list of all those Penny Pilot classes. And this gets updated. I think it probably updates. It updates regularly, but about every 3 months is when I'm looking at this. And you can see all of these stocks have options that trade inside the 5-cent bid-ask window. So they're the most liquid, optionable stocks, right? It's a list of a couple hundred. We're not talking about thousands here. So you can take that and use that as your list. Again, you get that at MEAXoptions.com. And if you're questioning how to get here, if you just came in a little bit late, then keep in mind what we're doing here is we're just simply Googling Penny Pilot list to get there. All right. And Kathy, thank you very much for that super chat donation. We do appreciate that. Glad to have you back again as part of the program. Now, let's move forward. And we already now know how to Google this options program. So let's talk about why we trade options. Now, I don't trade options again. You must first think, well, we trade options because we think a stock's going higher or lower. That is an alternative, but that doesn't mean that we are going to trade options because that's the only reason. No, but really, why we trade options is to control stock control a group of stock at a higher price. We can also trade options to protect our portfolio, and we can also trade options to pay for protection. So trade options against options. And so we're going to discuss all three of these in our 4-part series, our 4-part live stream series. The other thing I want to do is I want to go out there and look at some of this. So, for instance, let's think about, I'm going to jump ahead for a moment, cryptocurrency. All right. So when you think cryptocurrency, you think Bitcoin, you think Ethereum. But what about if we want to look at, for instance, options on, let me bring up a stock chart. Here's CoinDesk or Coinbase. So this is also a way of trading cryptocurrency, is trading something like a Coinbase. When you look at Coinbase, this is my biggest loser right now in my portfolio is Coinbase. In fact, it's one of my few losers right now in my portfolio. But Coinbase is a loser. I own it at just around, I think I own it about $290 a share, and we're trading now around $240. And so when I look at this one, I think of a couple of different things. I think, all right, how can I protect myself from downside? Options. How can I come in and backfill and be able to lower my break even? Options. All right. But I own the stock. And my long-term view on the stock as an investor is higher because if you've heard me talk about Bitcoin and Ethereum, I think these are going to be long-term sources of wealth. And so when I look at long-term sources of wealth, I also think as a stock trader that the fundamentalists got this one right? But as a trader, have I gotten any shorter-term trading systems or trading signals on CoinDesk? No, I haven't. Let's just assume that maybe I have. All right, so let's take a look at the option chains. And I'm going to come back and look at these again, but just going to update, and I'm looking at the options that expire just in a couple of days. And as you can see here, the at-the-money options, those 240 calls, they're trading for $6. These options expire in 3 days, and they're trading for $6. All right, that's expensive. To me, that's expensive. So there's ways we can get around that, but the problem is that right now, I don't have a position. I don't have a trading position on Coinbase. I might have one tomorrow, but as of today, there's nothing there that makes me want to go in and trade this. I don't have any. I can't spot an opportunity, and I definitely don't have a low risk trade I can do here. All right, but we'll jump back and look at this one again tomorrow, because tomorrow might have something worth looking at. All right. Now, some of you that are brand new are sitting in here going, all right, you kind of gone, you've really taken it a little farther than I need to. So tell me a little bit more about options. All right, so let's do that. Let's do a little bit more on options, and then we'll come back and we'll look at that desk again. All right, that Coinbase. Calls and puts, very simple. Calls and the buy side. Or if I want the stock, if I'm looking for a stock to go higher, I may take a call position. If I'm looking for a stock to go lower, I may take a put position. All right. Now, there's other ways we can do this. All right. I could sell calls if I believe that stock is done going higher. I could sell puts if I believe the stock is done going lower. There are ways of doing this where you will not break the bank. We'll talk about that tomorrow. But today I want to talk about buying options, and I've got a couple of strategies that are on tap for me to do just that. I'll show you those here momentarily. Right. A couple of other things with options that you need to know about. Number one, in the US and over most of the world, one options contract is good for 100 shares of stock. That's the contract. There are a couple countries where one contract equals 1,000 shares of stock. And you might think, wow, that's super leverage. And on the at first thought, it is. But when you look at the price of these stocks that are $5, $4, $3, and they don't move hardly much at all, in order for someone to trade an option, they need a little more leverage than 1 to 100 on stocks like this. And so that's why a few countries actually offer 1 equals 1,000. Okay. Strike price. Well, we look at strike prices, and we're going to be looking at strike prices, but basically the price agreed upon between the buyer and the seller. And it's the price the buyer can exercise the option contract for. Now, you might ask, do I exercise option contracts, or do I have option contracts that get assigned? Yes, I do, if I want the stock. If it's part of an investing strategy, if it's part of something I want to do long term. By the way, I did that with Coinbase. All right, I sold puts on Coinbase with the intention to take the stock and get paid for it. Again, I'll show you how to do that tomorrow, but that was part of a long-term strategy, right? So that's option strikes. Expiration dates, which ones are best? There are a bunch. I have these in order of liquidity. So if you want to know which ones are the most liquid and the ones that I trade the most, the third Friday of each month. All right. Next, there's weeklies. They expire each Friday, but you got to be looking at options that trade weeklies in order to get those. Right. Monday, Wednesday options are up and comers, and those are only good for a few securities. And then at the bottom of the heap, you've got end of month options. They're the options that expire at the last trading day of the month. You have quarterlies, which expire on the last trading day of each quarter. That's, again, March, June, September, and December. Those are quarterlies. And then you've got leap options. Those are options that expire 9 months or more from today. That's what's called leap. Which ones are best? Depends on really what your trading strategy is. So if I'm going in and I'm looking at something like a strategy called Dogs of the Dow, where that's a once-a-year strategy, then leaps are going to make the most sense for me, because I don't have to I put that trade on. I don't have to think about it again or really worry about getting out of it until sometime later in the year or even early next year. If it's a monthly strategy, then I'm going to be looking at third Friday options. If it's a weekly strategy, I'll be looking at weekly options and everything in between. So the answer of which are best, well, that depends, again, on your trading strategy. Okay. All right, let's see what we have here on a couple of quick comments. John, you're welcome for fixing volume. Let's see, Melissa, thank you very much for the comment. I appreciate it. That my job here with our trading room is to simply teach. All right, simply teach you how it is that we trade these things, and I try to go through it at least as basic as possible. To give you an idea, my daughter helps out with the social media aspect of this, and when she's putting up stuff on YouTube, she says, "Listen, there's your way of putting a title together, and then there's my way of trying to understand what it is you're trying to say here." So I give her carte blanche on what she puts in the title of each of our videos and our live streams. So, but thank you very much, John. Why did you not buy puts to insure your coin? I'll tell you why. Because those put options are expensive, and I don't like overpaying for insurance. There is a way to insure Coinbase and any other company you see going down. I'm going to show you how to do that tomorrow, and also in part 3, cheaper than simply buying puts. All right, so that's important there. Gary, thank you very much. Take a look here. Let's kind of move along here, and let's talk about getting kind of into a little bit more on options. All right, definitions I talk about when you hear me say in the money option, you know that option has real money. It's got some real value to it. If it's an out of the money, it's something that I'll trade it, but I'm typically not a buyer of out of the money options. I'm a seller of them, and I'll show you how that we do that. And then, of course, at the money options, that's where the stock and the strike prices are very close together. And the option may not have any real value, but it's more than likely, the most volume option traded in the series. Okay, so that's my take on when you look at definitions. Time decay. Okay, so options have something called time decay in them, and just think of this. All right. 2 things I want to let you know about time decay. The shorter term options, the decay happens faster. The longer term options, the decay happens slower. Also, in the money options, all right, at the money options, start out slow, but in that last process, those last 30 days, they decay the most, where an in the money option is more linear because it has real value. So I'm a person who likes to be a buyer of in the money options and sometimes a seller of at the monies. All right. So that's what we look at there. A lot of that has to do with something called volatility, which is the speed of the stock relative to its time. All right. There's 2 types of volatility we look at: statistical and implied. And statistical volatility is basically the price movement of the stock. So when you look at, here's AMC this morning. All right, let me do this. Let me make this one chart. There we go. This is AMC since 9:30. It's gone from 32 down to 28 up to 31. You might say, that's not a big move for AMC. Yeah, well, look what AMC's done in the last week. All right, here's Thursday, 18 to 36. The stock doubled in value, then came right back down to the low 20s. Now we're back up to the 30s. Is it safe to say that AMC has a lot of high stock volatility? I would say yes, it does. All right. Now, implied volatility is what we look at on the option side. So again, a lot of stock movement here on the stock side. What about the options? Well, let's take a look at the options. Now, I'm going to jump into another tools login. All right, and layer these on top of each other because I don't want to get away from Coinbase. Take a look at the option chains, and I'm going to go to the option chains on AMC. All right. In fact, when you take a look at the options, you're going to say, okay, stock's at $30, and so the call options are $4.98. Those are the 30 calls that expire in 3 days. Now, look at Coinbase for a moment. Coinbase has a 240 call trading for 6. AMC has a 30 call trading for almost 5. Which one has the higher volatility. Now, you might say, well, wait a second. The Coinbase options are more expensive than the AMC options. Yeah, but look at them relative to their stock price. AMC has a $5 option on a $30 strike. Coin has a $6 option on a $240 strike. So you see that, guys? So one way that we can look at that is we can go in, and I want to actually look at, let's go over here. Let's bring up a stock chart. And I want to bring a stock chart up on AMC. Now, we're going to tie all this together right now. Now, take a look at AMC right now. So here's AMC. You know what? This is 120 days. Let's just look at the last 20 days. That's kind of important. There's your last 20 days. Really didn't do anything. But over the last week and a half, this stock has woken up. All right. And we see statistical volatility is start. And statistical volatility doesn't mean it's going up, the stock's going up. It means that the ranges every day are getting greater. Right? Again, ranges are getting greater. And so because the ranges are getting greater, that means that stock volatility is getting higher. What about the options? Well, I'm going to throw a chart up here. Let me show you this. Let's get rid of those moving averages. Let's put on an overlay. And I'm going to look at the 7 to 30 day at the money IV. The IV, what we look at is the red line. And the red line tells us how much those options are going up in value. You see this red line last week? The red line says that, and this is still expensive, 130 last week. 130 was the options implied volatility. Now, I want you to reference that to a moment to the VIX. Where's the VIX trading at right now? 10? 15? So it's safe to say that last week, AMC had an options volatility. AMC's VIX was trading at 10 times the actual VIX. Today, AMC's VIX is trading over 20 times. So it's safe to say that the options on AMC just doubled in value. And I'm talking about the time premium. The time premium doubled in value. All right? So I don't want to be a buyer of these calls. Absolutely not. But I might want to be a seller. And we're going to look at that tomorrow. Right? So this is volatility. Again, volatility is the speed of a stock, but we're looking at implied volatility, which is present option pricing. And what implied volatility tells us is it really is an indicator of where option traders expect the movement to go moving forward in time. And they equate that into option prices. Now, let's get into today's session. Best low volatility call option practices. So this is what I believe is the best thing you can do, knowing nothing else except options. All right? Knowing nothing else. If it's a 90-day or more option, this is what I like to do. I like to buy at the money, maybe out of the money options if it's a leap and I expect the stock to leap past the option price over time. So 90 days or more, at the money to out of the money. If it's going to be 30 to 90 days, in the money to at the money. And if it's less than 30 days, I like those in the money options, especially options that have a delta of 70 or better. Okay. Now, I'm not talking about day trading options here. I'm talking about any buy and hold where I plan on buying and holding for a week or a month or 2 months, 3 months or more, right? And these are these are guidelines, right? These are guidelines because maybe I'll do a spread, maybe I'll sell something. There's a lot of things, but this is just on call options, looking at call options only. Now I'm gonna take a look at comments here, and I'm gonna see if you have any questions or comments. If you got questions or comments on what I've shown you so far, put those in now. I'm gonna take a look at those here in just a moment, but I want to mention one more thing, and that's on puts. Right, trading puts for profit. So if you've never traded a put before, and when I ask folks, I've been doing this for decades. I always ask this question. I say, what if if you can remember your first option trade, what was it? Was it a call option or was it a put option? 90% of folks that I ask that question to always come back and say, well, it was a call option. That was the first option I ever traded. Very few people say, I bought my put as my very first option trade. So, long puts, they have the same characteristics as long calls, but in down markets. That means they have the same contract size, they get the same number of strikes, expiration dates, but they increase in value as stock prices decrease if you're a buyer of puts. Okay. So at this point, I want to take a look and see what we got going on with our comments, guys. And for those of you that are just joining us, again, I want to welcome you to the live stream. Glad to have you all here. Typically on Mondays, what I do is I do a stock and cryptocurrency outlook, and I talk about your favorite stocks in my weekly stock scan. But this week, it's all about trading essentials, and I'm doing a live stream every day this week. So I want to mention that. Guys, if you have not done so, if you're brand new and you find this information educational, then do me a favor, hit that like button below, share this channel with others, and subscribe. We just hit our 20,000 mark yesterday. We're very excited about that. That's why I'm sharing with you 4 days of live streams that are happening this is going to be a 4-part session each day. We're going to be doing some different topics, all revolving around stocks, options, and cryptocurrencies. So please like our channel, like this channel if you're in this live stream. Also want to let you know that we're going to be using our option tools. And I'm actually going to give you guys a free app here just after the stop sign. We're going to talk about a free app, and I'm going to show you where to download that app. We're going to use that app in today's live stream session, and we're going to look at cheap options. All right. And purchasing cheap options because there's a few of them out there. Right. And of course, feel free to chat with me. I'm going to go to the chat box right now. We do have super chat donations. So if you feel like donating to the channel, keep in mind we did this last year. We're doing it again this year. All of the proceeds of this live stream and every single video that we do here on YouTube, all of those proceeds go to charities, various charities. If you want to know what they are, go to tomgentile.com and go to the section called Giving Back, and you'll see all the charities that we have donated to recently. And I'll talk about the ones that we're going to be donating to as we do future podcasts. We donated to LBX Sports, thousands of dollars that we donated to LBX Sports last week. And we're looking at St. Jude as our next donation. So again, guys, realize this: every dollar that comes into this YouTube channel goes right back out into donations. So thank you all for supporting the channel. Okay, let's talk about, again, let's go to some quick comments, and I'm going to try to back up here a little bit. Yeah, we do. All of these live streams are recorded, and I think it takes probably maybe 15 minutes or a half hour after the live stream is over before the recording goes out. So all of you will have access to that. But if you're live, you got access to what I'm doing and what we're going to be looking at. I will be going through the rest of this broadcast. I'm going to be going through a couple things. We're going to do the free app. I'm going to show you how I'm trading off the free app. I'm actually going to do at least one trade off the free app. And I'm going to be doing that in conjunction with a trading strategy that we use here as well. So we're excited to share that with you guys. So get ready. Get your Apple phone out. Get your Google Play Store ready to go, because I'm going to be giving you a link here shortly to downloading something called the Morning Report. This is something that changes every single trading day. So really great stuff. We're excited about that. And letter J, thank you very much for that super chat donation. I appreciate it. So let's see what we got going on here. Recordings, yes. Yeah, we got a lot of folks asking about the recording. So yeah, recordings all go out, guys. We're excited about that. It's Jose. Jose, I apologize. I just saw Jay come up at the top of the screen. But yes, I absolutely appreciate it. And thank you very much for donating. So appreciate that, buddy. And again, thank you for the support. BTC target to 16,000. I have a downside on that one. We'll talk about that again on Friday. But I do have downsides. Obviously, we hit 30,000 on the nose. What was that, last week before? And we double bounced on that. We've double bounced on that. We've come back up and got very close to that move. All right, that took us up to 40, and we've dropped back down again today. We'll see where this ends up going. I see 20,000 as a possible move to the downside, and of course, I'll be buying more at the 20,000 mark. So that's if we go below the 30,000 mark that we've already hit earlier. All right, Robert, what is IV percentile? All right, let's put that up on the screen because that's a good comment. A question. What is IV percentile? So IV percentile is basically what we do. And let me bring this up here for you real quick. What we do is we actually look at this implied volatility, and we look at a percentile. So think of this, between 0 and 100. All right. So if the temperature was 0 outside and that were the low for the year in our state, then that would be the coldest on record for the year. And if the weather was at 100 degrees and that was the high for the year, we'd be at the high end of that ranking. What we do is we look at options the same way. The percentile tells us if we're down to 0, then we hit that level 0. That means those options are as cheap as they've been for the year. And if we hit the IV percentile of 100, that means that the options are at 100% of their range for the year. All right. So that's that. Gary, appreciate that donation to the super chat, buddy. I appreciate that. Thank you very much. The donation link is down at the bottom, John. So it's down near the bottom of the page here. And James, yes, this is going on live right now. Thank you for asking. All right, so let's move along here, and let's do what I've been kind of teasing you guys about right now, and that is let's talk about this new app. So again, I want to thank all of you because you guys were the ones. You pushed us to the 20,000 mark on YouTube. So we now have over 20,000 subscribers. We're excited because it might not sound like much. I mean, this. I'm not a Kardashian, so I'm not going to have millions and millions of subscribers. And in our options focus group, we're excited about where we are. With our subscriptions here and our subscribers. So, we think, 20,000 is exciting, especially since just 6 months ago, we had 10,000. So we've doubled our subscribership just in the last 6 months. We're very excited about that. And we'll see where we go from there. But for those of you that are new, that are subscribing, we do live streams once a week. We do videos once a week. We do podcasts once a week. And every so often, we're going to start doing our Optionetics Tom's Trading Room Essentials here. And this will go over a week like we're doing right now. So we're excited to bring this to everybody. If you're, again, brand new, please, I want to thank you. And you can thank us and you can thank the channel by simply liking, all right, subscribing, and sharing this channel. Jim, thank you very much. Let's hit that bell there. For your donation to our super chat. Again, all that goes to charity. Appreciate that. Okay, so let's go ahead and move on here. And let's talk about this app I got for you guys. So I have a new app. It's in something called TG Suite. So if you pick up your phone right now, there's my phone. Oh, I got a YouTube. Link. Watch now, Tom Gentile. Tom's Trade Essentials Part 1. But I also said I was going to offer up a new scan. All right, a scan to everyone. Those of you that are on our YouTube channel, you're getting it first. All right, it's an app called TG Suite. So what you need to do is you need to go into your iOS apps, the apps portion, or the apps portion of the Google Play Store. And what you're looking for is something called Tom Gentile, TG Suite. When you find it, it's going to look just like this. All right. And you'll see a TTR logo there. click on download or get or whatever it is that you have to do there. Open this up. And when you open it up, you're going to come to, now, if you've never opened up, if you never used our apps before, then you have to sign up. All right. And when you sign up, once you sign up and you log in, you're going to see 7 different buttons on here. All right. Now, the first 6 we reserve for some of our premium software. All right. That's software at Tom's Option Tools. But if you take a look at the one down at the bottom, all right, take a look at the one down at the bottom here. It's called the Morning Report. That one is open for everyone now. And when you click on Morning Report, you're going to see these 6 lists that are available to you. Now, what we do is we go through and we look at high volume. All right. This is high volume on options, high open interest on options. We also have the unusual call put volume. That's session 2. We have a cheap implied volatility and an expensive implied volatility, and that's going to be the last 2 buttons at the bottom. Now I'm going to walk you through this. I'm actually going to link to my phone right now. So let me go ahead and log in, and I want to link to my phone. So this will take me just a moment, and I'm going to do that right now. I'm going to screen mirror straight to our live stream. So I'm logging in. It's going to give me a password for the phone. There it is. Got to type that password in to 824. And now you're going to see my phone pop up on the screen. And there it is. All right. Now I got to actually use my phone. And so I'm going to use my phone right now. Here we go. So now we're looking at the actual morning report. Now, this is what this is this is an end of day report. This end of day report, the way it works is that at the end of each trading day, after the markets are closed, we then go through and do all the calculations. High volume, not hard to do. High open interest, not hard to do. Unusual call volume, and again, that's going to be put on. That's going to be based on what we're looking at as far as calls. Unusual put volume, what we're looking at based on puts. Cheap IV and expensive IV happen to model based on, again, those IV percentiles. Basically, what's cold, what's real cold right now, and what's real hot right now. What do I want to be looking at buying? And tomorrow we're going to come back and we're going to talk about this one. What we're going to be looking at as far as selling. Now, I'm going to mention this too. Next week, I'm going to do a series of videos on this app. And so I'm going to do a 3 or 4 part series on how you can utilize each one of these. Okay. But what I'm going to be doing over the next 2 days is I'm going to be going into the cheap and expensive portions of this as applied to buying calls, buying puts, selling calls, selling puts. Right. So that's the plan here going forward. So if you haven't, if you've tried downloading this and you say, hey, I can't move as fast as you, don't worry. That's what I'm going to be putting videos for, just in case any of you that are going in and trying to download this and trying to keep up with me. All right. So anyway, let's go in and I'm going to work with these with the cheap IV today. All right. So I'm going to work with the cheap IV today. So I'm actually just going to take my hand, my thumb or my finger, and I'm going to click on cheap IV. And this is what comes up. So what this is showing me is a list of stocks. All right. So as you see that down the page there, you see the list of stocks. The next column is the highest that they've been in the last year. All right. This is the highest, not in stock price. Forget stock prices for a moment. We're now using an options-oriented app. This is the highest implied volatility for these stocks. What we do is we measure these each and every day. Dave, thank you very much. I appreciate that, buddy. Appreciate that. And our charities will appreciate that too. By the way, the charity is not Tom Gentile, okay? Somebody's got to be thinking, oh, yeah, he's giving it to his own charity. No. We go out and we donate this to various charities out there that are not-for-profit charities. So you've got, again, stock, high IV. That's how expensive it's been in the last year. Low IV, how cheap it's been in the last year. Current IV, where is it right now? So when you look at Bank of America, my wife owns Bank of America. She owns the stock. I actually had this up. This is how bad I am. All right. It's Memorial Day. Grilling out. Everybody's excited. They're talking about how great the weather is. And in Florida, the weather's actually uncommonly dry. In fact, we had red flag warnings over the last week. But here's me looking at this. And I'm saying to myself, I said, don't you own Bank of America? She says, don't you got anything better to do on a day the stock market's not open? I said, cryptocurrency's open. Anyway, so I'm looking at Bank of America. And the reason I asked is because the options implied volatility is very, very cheap. So I'm looking at that. I'm thinking, all right, this might be something to look at. Now, if I click on, look what I just did. You didn't see what I did. But if I actually click on the symbol BAC, this is what happens. You then get a turn. And what I'm looking at here is, again, I'm looking at all the options combined, the 7-day, the 30 days, the 1 month, the 3 months, all the way out 149 days to expiration. And we're smoothing those together. And we're seeing that back at the beginning of the year, those options were trading as high. Now, remember, left-hand side is the stock price. Right-hand side, this is the implied volatility of those options. And so you can see that the options were as high as 39, and now they're down in the low, just coming off the low 20s. So that tells me that if, and maybe we're looking at this saying, hey, buy the high. There's nothing wrong with that. That could be a very viable trading strategy, buying highs. Well, if you're buying this and you're going to buy calls, this is very, very cheap compared to where those calls were a couple months ago, right? Now, in order for me to get rid of this, all I got to do is hit the X, and it takes us right back to where we were, all right? Now, I've got also EWZ is on here, QQQ, Tesla. Look at Tesla, 172 implied volatility, and right now it's trading on its lows for the year. Let's click on Tesla and see what's going on with it. So I'm actually going to put my finger right on TSLA, and boom, that opens up the chart. And now I can see, well, Tesla was a $900, again, $900 a share. But look, the implied volatility was high. It came down as Tesla wiggled around. But look what happened when Tesla went from the high 8s down to 550. It spiked up again. Does anybody know why the implied volatility would go up when Tesla dropped off? Give me some comments here. If you see implied volatility going higher while the stock is going lower, why is that? When the stock, back in January, the implied volatility went higher when the stock went higher. So why is it going higher now when stock went lower? And more importantly, why did it hit its high for the year when the stock was at $550 a share? Why is that? Jim, you're absolutely right. There is a fear factor happening with Tesla as it dropped out really hard. Traders were wondering, where's it going to go tomorrow? Where's it going to go tomorrow? And it pushes those implied volatilities on those option prices. Stock price went lower, option prices went higher. Now, look what's happened. We've stayed basically in a range. We double bottomed about 2 weeks ago down here at 550. We're kind of coming back, but look what happened. The implied volatility came down. The reason why is because look at the ranges on Tesla back in February. These big, big point ranges from the open to the close. Really high, even high last month. But look at what they've done in the last couple of weeks. Smaller ranges, smaller ranges. And smaller ranges basically mean more efficiency, and more efficiency means those option prices came down. All right. Jacob, nothing happens when clicking on the ticker symbol. No, it most certainly does happen. I'm clicking on the ticker symbol. Take a look at QQQ. When I click on QQQ, maybe get a little closer there. You got to click on the actual symbol, all right? And by the way, if you're having any issues opening the chart, then do me a favor. All right. Just email us at support@tomgentile.com and let's take a look and see what's going on. We'll look into that because everything should be working A-OK. And again, you're seeing here, and Gannon, you're right too. There's more options being bought than sold, and when you got calls and puts being bought, that's pushing the offers higher. So this is a lot of reasons why we see these option prices going up. And in this case, with Tesla, the option prices came down. Now take a look at QQQ. Here's the Qs. All right, Qs are trading at 315, and the options were trading up here in the 30s. Now Qs trading at 315. A little later, and the option prices came down to 23. Look at the Qs again, trading at 315 just 2 weeks ago. Options implied volatility at 23. Qs move higher. Option implied volatility moves down into the teens. So what is happening here is that as the price of the Qs go lower, option premiums tend to go up. It's that fear factor. And as the Qs go higher, implied volatility cools off. So we're looking at the IV on the Qs. And we're at a point where, for the last week, the Qs have really gone nowhere. Are they likely to go higher? Or are they likely to go lower? Right? Well, I'm going to show you what I'm going to look at, what I believe may be the way that I'm going to trade it. I'll show you how I'm going to trade it here in just a moment. But again, this is all built on, if you're just coming in, guys, this is all built on our morning report. And our morning report is something that's available and let me get this out of the way here. So I'm going to kill this for now. This is a new app that we just created. It's part of our TG suite. So if you go to the iOS or you go to the Google Play Store, go do a search on TG Suite, bring that up and install that. And TG Suite is a suite of apps that we offer this is our premium apps, but all the way down at the bottom, we're putting this premium app available to everybody. You don't have to be part of our software to get the Morning Report app. The Morning Report app is something we're doing every single day, and it's going to be based on these groupings of options. So cheap IV, you want to know what's expensive right now? I'll go ahead and let me bring the tool back up again. So let's go screen mirror one more time. Let's go to, let me go ahead and log in. I got to put the password in once again. So we'll see what this looks like. All right, so here we go. Let me pop that password in place. There it is. Here I am. Here we go. Okay, so I'll go to expensive IV. I'm going to show you this one tomorrow. So we're going to look at stocks, and they may not be the same stocks tomorrow, but I can tell you Biogen was on this list, and I took advantage of this one last week. And I might take advantage again of this one using this high implied volatility. Look, 109, 32, 99, closer to the top than the bottom. Look at TAL. 87.05 was the high over the last year. 38.08 was the low. Look where we are right now, 69.75. Closer to the high than the low. Look down here. GameStop, 7/11/39. I don't believe I've ever seen a stock that had that high of an implied volatility. In fact, that was part of the reason why a lot of these brokerage firms shut down trading, because they themselves never saw volatility higher on. I can't, there's nothing I can remember. Maybe the crash of 1987, we saw implied volatilities higher. But I don't think I've seen a stock in my trading career where we saw an IV that was that high. Look at the low. Even the low is 81.51. Now you might say, well, wait a minute, Tom, 159 is higher than 7/11. But 7/11 was a spike that came back down. Again, we're looking at those highs and lows on something that our software deems regular ranges. So GME came in as a high, expensive implied volatility. Those options are expensive. And I showed you those options. You guys all saw that, right? Let's go back and look at them again if you don't believe me. So again, if you take a look at the stock and option trade, oh, this is AMC. My bad. Let's go look at GME's options. All right, so GME's options are going to look like this. Where's GME options trading at right now? Let's update the chart. And let's look at their Friday options. The options that expire in 3 days for GameStop. Wow. Look at that. $19.15. Now, if you remember correctly, here's the 240 calls for CoinDesk, $6.10. Here is the 245 calls for GameStop. The 245 calls for GameStop are almost triple their value as CoinDesk. It just, again, shows you which options are expensive and which options are cheap. We're able to look at that in graphical format, and we were able to give that to you in the version of our morning report. Now, what I'll do tomorrow is I'll go through the morning report tomorrow, and we'll talk about unusual call and put, and we'll talk about high volume and high open interest as part of the review, right? But I still want to show you a trade. I want to make sure we roll out of here with a trade opportunity today. So let's talk about not just the morning report, but let's talk about how we take this information and actually use it as rules-based traders. All right. So with rule-based traders, we're always looking to spot the opportunity, create low-risk trades, and plan, execute, and manage. Now, I'm going to combine the I'm going to combine both the money calendar or our money calendar app with those cheap options. All right. Because I went and looked at a couple of these just before I got on the live stream. And there's one I actually like. So I want to share that with you. All right. So we're going to do that right now. We're going to do all three of these: spot the opportunity, create that low risk trade, and then plan, execute, and manage. Spot the opportunity. I'm going to be utilizing the morning report and our money calendar app. Creating the low risk trade, we can do that using some option tools, and planning, executing, and managing the trade. Well, guess what? I'm going to use Street Smart Edge to do that. Show you actually how I put the whole thing together. So let's move forward. All right. So back it up here a sec, and let's get to spotting that opportunity. So we're going to be looking at again. I'm going to go over here to the money calendar. Now, one of the trades that we did involved QQQ. All right. Remember, QQQ was on the morning report. In fact, if I look at those cheap options once again, it was number 3 on the cheapest options that we look at. Number 3. Now, if you take a look at Qs again, I see that the Qs right now show a 100% trading opportunity. That's over the past 7 years. Let's bring that up. What I'm doing is I'm actually going into an app where I'm going to look at the Qs. I want to look at the patterns on the Qs. And we're going to look at trades that start in the next 10 days. I'm going to look back 10 years, and I'm actually going to show the top 10 results. There we go. All right. Let's click on show. Let's see what we get. All right. So what I have here is I have a list on the Qs that's starting in where it really starts tomorrow. All right. So I could look at tomorrow, and here we go. We start on June 3rd. All right, today's June 1st, but I'm going to set this up. I'm going to go ahead and set this up, jump in ahead of time a little. It starts June 3rd and runs all the way to July 14th. This is a pattern that has worked out the last 10 years in a row. All right, so let's take a look and see what that pattern, what that pattern's done. Not much in 2011, 12, 13, 14, barely anything in 2015. 2016, it popped up 2 points. 2017, barely anything. All right, 2018. We had a nice run. 2019, even bigger run. 2020, 26 points in 2020 between that June, beginning of June to mid-July run. See what happened here with this. So this is all based on pattern recognition. Okay. Now, this one is part of our software. All right. And if you're interested in our software, then I suggest you go take a look at a free 2-week trial that we offer. If you go below in the description, you can see how to register for the 2-week free trial. The morning report is absolutely free. You could all utilize that. All right. And so if you're already part of our tools and you use our apps, you just use your same login. But if you're brand new and you're downloading that morning report, if you're downloading that app for the first time, you just simply use the log. You create yourself an account and you can utilize that morning report. All right, so that's all you need to get that going. But I'm going to take these two things and put them together. What do I know about the QQQ? All right. What do I know about the Qs? What I know is that they are cheap in terms of options. What do I know about the Qs also? Well, they have a 10-year history of running up between basically this week and the second week or that second week of July, second to third week of July. So what I'm going to do is I'm going to take this opportunity and I'm going to create an acceptable low risk trade. This is how I do that. I'm now going to go and I'm going to go into some stock and option tables. And I'm not going to look at CoinDesk because CoinDesk isn't giving me anything right now. I'm going to look at QQQ. All right, let's update the Qs. Now, I'm not going to be using options that expire today. I'm not going to be using options that expire tomorrow. See all these option strikes I can look at? I got today, tomorrow, Friday, next week, next Wednesday, next Friday. I don't want to look at anything in June. I want to look at the options that expire the 16th of July. Now, why the 16th of July? Because the 16th of July is just after the 14th of July. And the 14th of July is when this pattern right here said it was going to end. So that's what I'm looking at. So let's go look at some stock and option tables real quick on the Qs once again. And what I'm going to do is I'm going to update this QQQ information. Now, what I can also do is look at those patterns and looking at an average of what did the Qs do last year? Well, they went from 231 to 270. I mean, that was more than 10%. That was more than a 10% move in 6 weeks. That's a little on the high side. What happened in 2019? 170 to 190, another 10% move. What happened in 2018? 170 to 175. Okay, more of a 3% move, right? So I'm going to cycle myself down to maybe a 3 to 5% move at the most. The reason why I'm doing this is I want to get an idea if the options that I buy, what they're going to be worth if the Qs are 3% higher or 5% higher in July. That's what we have to do. So part of creating that low risk trade means I got to go out there and I got to look at these Qs, not GameStop. We'll look at GameStop tomorrow. I want to look at these Qs and I want to update using those mid-July options. And I want to see where they are likely to go. Right now, the QQQ is clocking in at $333, roughly. 10% of 333 is 33. So what's half of 33? 17, 16. What's half of 16? 8. All right. So that's 2.5%. So 3% is going to be about 10 points. So I want to see if I can make any money on the QQQs if they move up 10% between now and July 14th. So if I look at those 333s, here's the problem I've got. See that 333 call? It's trading for $8.74. If I were to buy one of these, let's look at buying that call option. If I were to buy that call option, let's look and see what the model, our option pricing model is going to tell us. All right, let's make this bigger so everybody can see it. All right. So there we go. And let's take a look at now what we stand to do in our risk and reward. So I'm actually going to look, I don't want to look at risk channels. I want to actually look at the risk graph itself. So I hit the wrong button over there. Got too excited. Risk graph. The risk graph is going to tell me where we can be on the curve at any time. So really, this is the area that we're likely to go up to by July, by that July 14 timeframe. the top of this chart, all right? These are standard deviations. And of course, look at this line. This is the break even. So we get to the standard deviation. We're not much higher than the break even. I mean, our option goes up, makes a little bit of money, but not much. If it went up tomorrow, we'd do fantastic. We'd almost double the option trade. But if we wait until all the way to expiration, we only stand to make $350 on an option that we're paying over $800 for. I don't like that. So I got to do one of two things. Either A, I've got to look at this and look at potentially spreading, and we're going to talk about it on Wednesday, or I've got to look and see, is there a shorter pattern that is likely to occur? All right, let's do this. Let's go back to our money patterns, and let's get rid of this. And let's take a look at, is there anything that can be shorter term, right? So instead of looking at the top 10 results, let's look at the top 20 results. Top 20 results show patterns that end in 20 days, all right, but they're only 70% effective. How about our top 30 results? How about the top 40 results? See, we can get all kinds of crazy here, and we're looking at 90 and 100% patterns for the most part. But some of these come down. I mean, the best we can do is 20 days out. So that's looking at the 20-day patterns starting today. All right. So that's one way we can look at this. The second thing we can do is we can look at the length of trade. See this here? Length of trade is greater to or equal to 30 days. I'm going to change this. So I'm going to say less than or equal to, and let's bring that thing down to less than 20 days. Let's hit this one more time. So again, what am I looking for? I'm looking for patterns that occur in that less than 20-day time frame. And again, I'm looking for just short-term results. How about 10 days? Is there a pattern that can happen in 10 days? Oh, look at this. Here's some 5-day patterns. And then there's some that go out to 20 days or 27, 30-day patterns. There's one other way I can do this. We just got through a holiday. Let's go ahead and look at a holiday trade. So I'm going to put in QQQ. I'm going to look back the last 10 years. I'm going to say, well, what happened the last 10 days after Memorial Day? Last 10 years, what did happen the last 10 days after Memorial Day? I'm going to submit this, and I see really nothing going on here, right? In fact, if anything, that red tells me that Memorial Day for Qs is a selling opportunity, not a buying opportunity. So the 4 days after, that's, count them with me, June 1st, June 2nd, June 3rd, June 4th. What is that? Even though the Qs have a bullish pattern, those bullish patterns all start next week. We've seen this. So it looks like we play the bear side this week if we really want to play the Qs. It's cheap enough. I've got cheap options, and I now have a history of them going down right after Memorial Day. Okay. Did I say Father's Day? No. Okay. So let's take a look again and see, well, what did happen? All right. Well, this one's a 7 out of 10. Last year, it went down during Father's Day. It just dropped. The year before, no, it went up. The year before that, it went up. But we're even seeing back in 11, 12, and 13, we saw, and of course, year 15 and 16, this went down as well. So if you're on that area of buy the rumor and sell the news, and you're looking at a potential trade, this is one way we could do this by using pattern recognition, short-term pattern recognition. So short-term pattern recognition tells us that the put options look like they make the most sense for this week. All right, so now what are we doing? We're now going back, and we're going to reset our options. And here's our options on the Qs. I'm not looking at calls this time. All right, so kill the options on the Qs. Let's go back to our risk graph. We don't want to look at the risk graph on the Qs. We want to look at the option tables. And this time we want to go back and look at the options that expire when? This Friday. There's your Friday expiration options. Let's update the Qs. We don't need much of a drop. The options are cheap. The at-the-money options, the at-the-money puts, $2.22 right now on the 333s. If I bought one of those, what do I need? All I need for a double is this to drop down just below 329 by Friday, right? Needs about a 4-point drop, a little more than a 4-point drop by Friday, and we double our money. Needs a $2.22 drop to break even by Friday. This is a low risk trade, all right? That's what we're looking at, a low risk trade. So how do you place an order on a low risk trade? All right, well, I'm going to show you how to do that now. So what I'm going to do is I'm going to pop on over. I'm going to open up my brokerage account, which is Street Smart Central. I'm actually going to pop this up in front of us. So now we're going to look at real-time prices. Let's put that in place. All right, so here's my Street Smart Central. Open that up. You can see that. And I got QQQ lined up. I'm going to look at puts. And I'm going to look at selecting. I'm buying to open. Now, typically I go in, I have a certain risk level that I like to do on my trades. But for today and for the rest of this week, I want to make sure nobody accuses me of front running. All right, so I'm not going to front run. We don't do that here. And so what I want to do is I'm going to take the least amount possible here. And so what I want to do is I want to pop in here and just show you how to place these orders. All right, so I'm just going to buy to open 2 of these. So here's 2. And then the 332, now this is the 332 puts that expire today. I want the ones that expire on the 4th. That's Friday, because that's how far this pattern goes out. The 332 puts are trading 197 by 199. So how about I go in? And you know what? Typically I'll do a limit order, but this is a really tight spread here. So I want to get filled on this. So I'm just going to go ahead and place a market order. So what I would do is I would go in and buy to open, and I'll preview this. Remember, this is the 332s, right? Buy to open, QQQ 332s market order. It's going to cost me $399.07 if I get filled. Place the order, and the order's placed, and that should have gotten that filled. That's a fill. So now what I want to do is I want to go and place the exits on these trades. So I just got my fill right there. All right, so what I'm going to do now is I'm going to place the exit order on these. And so I do a number of different strategies on exit orders. And so for me, for a trade that's going to expire in 4 days, I'm going to look more, and it's also on the Qs, because the Qs are an ETF. So I don't look for a double on ETFs, especially in 4 days. I'll look for a 50% return. So again, and I'm looking to see, these got filled for $2, right on the money, $2. So this is going to be easy. So what I'm going to do is I'm going to place a trade, and I'm going to place an exit on QQQ. And I'm going to get out of those options I just got into. So I'm going to place the order. And what I'm doing is I'm selling to close 2 of the 6-4, the same options I bought. All right. Now they're 201 by 203. But I'm going to look to get out of these for $3. All right. Sell to close those 2 for $3. Going to preview that order. Now I'm going to bring in almost 600. Place the order. Boom. Order's placed. That's a limit order. All right. So I did a limit order to sell to close. My limit order's out there. Now, from here, if the limit order gets filled, great. I may have to revisit this, and I will revisit this with everybody. Right? We'll revisit this with everybody tomorrow. Right? But again, what am I doing here? I am doing what I like to call rules-based trading. Remember, what did I not do? I didn't chase this. Look at this. This jumped out, and I'm sure there was a lot of folks that were buying this in this 33 area, and then we dropped down to 30, and now we're at 31, moving down. This is hoping, all right? This is hoping. This is, the hope think that whole greed and fear philosophy that is out there that folks do. Not something I care to get into and talk about with you guys. But I mean, we talked about case studies. If I go out and I take a look at anything else that's out there, if we look at case studies for calls, all right, BAC is a really good example. BAC is a great example of a bullish case study. So let me end off with that one. It's hitting new highs. It's hitting a couple of other of our patterns. All right. And so we could take a look real quick at a case study. And guys, by the way, I just found out that, and it's my apology. I apologize for this, for not saying this earlier. A lot goes on in a live stream. But for those of you to download our morning report, you're going to get those stocks. You're going to get those lists every day. The charts are for our subscribers, all right, that subscribe to our software. But keep in mind that the minutia, all right, the stuff that you really want to look at, well, guess what? It's the list. The list is very important. The list tells you what's cheap, what's expensive, what's high, what's low, what's unusual for calls and puts, right? So apologize for not telling you that earlier. So we looked at today's patterns. We were looking at, again, we were looking at QQQ, and this turned out looking like a bullish pattern, but for this week, it's looking more like a bearish pattern. So let's hedge that with a bullish trade. So I'm going to go back, and we're going to look at Bank of America. So let's take a look at Bank of America, and I'm going to come back over, and we're going to look at stock charts, and I'm going to bring up BAC. So here's BAC. BAC popped up a little bit. It's been popping up. It's been hitting these highs here. Take a look at this. 1, 2, 3, 4. This thing gets up and closes. All right. 1, 2, 3, and then close forward. Then we would expect to see higher highs on Bank of America moving forward. Right. Now, Bank of America is not going to be a 4-day trade. Bank of America, I want to stay in for a couple of weeks at least. So let's go ahead and take a look at this as a rules-based call trading opportunity. So if we take a look at our, we're not going to look at holidays. We're going to simply go straight to the Bank of America. We're actually going to look straight at the options. So from here, I'm going to move to options and option chains. And I'm interested in the options that expire in 2.5 weeks, July 18th, the options for Bank of America. All right. So let's just take a look at Bank of America's options that are 5% higher. And you can see here, stocks trading just shy of 43. Look at this. The 43 calls are 74 cents. I don't want those. The 42 halves, which are 50 cents, they're 45 cents in the money, are trading for $1. How about this one? The 42s, $1.30. They're at nearly a delta of 70. Those are what I consider those in the money options. All right, I like that. So let's look and see what one of those would trade for. So they're $1.30. And if I look at those, I can see that if I get the move by June 30th, it takes us up to the top end of this area of standard deviation. That puts us out here, to around 100 and looks like $103 or so. That's pretty. I mean, you look at $1.30 to make 103. That's pretty close to a double, right? That's pretty close. And the thing is that we don't have to hold this all the way till the middle of June, right? That's an important one to look at too. Is that, I know you look at this and you go, wow, this could be $500 or $1,000 if it gets way up here. Look, chances of Bank of America going up to the low 50s in the next week, there's a chance. I try to look at things that are more probable. 5% up, 10% up. 5% up puts us really around the area of about 43 and change, or no, so 44. 5% puts us at 45. 10% puts us in the high 40s. And both of those are more than a double. So here's what we do here. Again, I go back to placing another trade. Let's put BAC in there. BAC, Bank of America. Calls this time instead of puts. All right. What are my calls doing? I'm buying to open. I'm going to put a quantity in there. You know what I'm going to do? Again, in fairness to, I don't want anybody to think I'm making millions off of getting ahead of everyone. One contract's all I'm going to do. All right. June 18th. 42 call. $1.22 by $1.25. All right. If I want to do a limit order and pay no more than $1.25, that's how this looks. Right. And so $1.25, that's $125. Let's preview the order. Let's place the order. Order's placed. All right. So now I have my Bank of America call option out there. Again, all about calls, all about puts. All right. And then what do I do here? What's the next thing I need to do? Well, what I need to do next is I need to, and I got that at $1.25, just got the fill. So I need to go ahead and place another trade. And what I'm going to be doing is I'm going to be putting in BAC. I'm going to sell it. I'm selling if it makes 100%. So again, what did I buy? Well, this time I'm selling to close the June 18th, 42 calls for Bank of America. And I want to do that for a double. What's 125 times 2? $2.50. Limit order. Sell to close. And you know what? I didn't do this last time, but a good till canceled will take you through until you decide to cancel the order and close it out yourself, or if it gets filled, whichever comes first. All right. So what have we done here today? I've shown you some stuff on calls and puts, all right? The basics. We talked about the morning report. The morning report being that report that I shared with you guys, where we looked at cheap options, really kind of went into the cheap IV. And we looked at QQQ, and we looked at Bank of America. Bank of America was busting out to new highs. QQQ was rolling over. But more importantly, there were patterns that showed that these trends were likely to continue based on back tests. And then from there, I just showed you how we look at creating acceptable risk trades. I put on the minimum amount just to show you how it is we did this. I'm not an investment advisor. I didn't tell you to do this. In fact, I'd rather you not. I'd rather you learn how to do this on your own. And so that was the plan here and the purpose for our broadcast today. And then finally, I finished up with talking about, again, planning, executing, and managing, showing you how you put it into a brokerage account. And of course, showing you how we go in and take that one step further, creating those exit strategies so you don't have to go out there and just watch them all the time. All right. So let me finish up here today. Just take a look and see what we got going on with the more recent comments that are out there. And I see a lot of you tried to get into the morning report and get past the list. And again, my apologies. The list, you get the list, but to get the chart version, you have to be a subscriber of our tools. All right. So, but hey, that TG suite is pretty cool. The list itself, very, very good information. All right. To download that TG suite, again, you're going to go to either iOS or you're going to go to the Google Play Store and you're going to do a search on TG suite. And there's going to be a list of different buttons there. Once you register, you have access to the morning report button, which allows you access to all 6 of those morning reports that we do. And those come out each afternoon for the next day's trading. That's what I use them for. All right. We took a look at the cheap option report today. Tomorrow, what I'm going to do is I'm going to talk about the report for looking at how to sell options premium. We're going to take a look at that report one more time. And I'm going to take you through a scan tomorrow too. All right, we're going to go in and do some scanning on options, and I'm going to do an option sell, some option selling strategies tomorrow. All right, great info. Thank you. Thank you very much, Donna. I appreciate that. Doug, appreciate your comment there. Lesson, love the app. I love the app too. I've been using this as part of our software for some time, and that was that was something that was part of our software. We just recently made an app version and decided to open it up to everybody and allow those of you on the YouTube channel to get a first look at it, and you have the first chance of downloading this. So guys, that's what I have for you. Hey, I got some homework for you. If you want to do a little, if you want a homework assignment, I'm going to give you a homework assignment. Let me go to the homework assignment here real quick. So the homework assignment is simply this. Let me blow it up for you. All right. We've got 2 case studies today, QQQ, puts on the Qs, and also looking at Bank of America on the call side. For those of you who are new, check out our YouTube channel. We got all kinds of education out there that is centered around stock selection, option strategy. We have a lot of our past Trading Essentials webinars. And of course, this one is going to be one of a 4-part series. So we'll be doing this all week long. And then, of course, finally, take a look there. Let me move that banner out of the way so that make sure you can see it all. Again, new subscribers, 2-week free trial. All you have to do is go down to the description below the page here, and you get access to that 2-week free trial. Finally, before I leave you for the day, do me a favor, guys. Please, if you haven't, please like the live stream we've done today. It really does help out with the channel. Share this with someone that might be interested in learning how to trade options and cryptos in a rules-based format. Not a hope, not a think, not a fear format. I mean, I could do what all these other guys do, is just put charts up here and look at it all day long and just sit and comment. But, I mean, anybody can do that. What I want to do is I want to give you a unique approach, all right, to trading. A rules-based, objective, non-emotional way of trading. Does it work 100% of the time? No, it doesn't. I mean, Coinbase for me, it was more of an investment, not a trade. But that's my big loser right now in my portfolio. All right, but keep in mind that I'm looking at it on the investment side. But even on the trading side, nothing is 100%. There is no guarantee in trading. But what I like to do is I like to follow patterns. And if something does the same thing over and over and over again, then you can be sure I'm going to be trading it that way, so long as I can spot it and I can create something that allows me to know what my risk is, know what my reward is, and then simply plan and execute and manage that trade. All right. So guys, thank you very, very much. So tomorrow, I gave you a homework assignment. Tomorrow, we are going to come back. We're going to do a little bit of a review. I want to talk about selling strategies, and we're going to go back to the morning report, and we're going to look at tomorrow's morning report, and we're going to see what it has to say in terms of options that we want to sell premium on. So that's the plan for tomorrow. All right. Thank you all so much. Have a great rest of your afternoon. This broadcast will be recorded, and the recording will be made available very soon. All right. And I hope to see all of you here tomorrow. Oh, one last thing. I got to mention this real quick. Harmon, thank you very much, buddy. Thank you so much. I appreciate that donation you put out there. I really do. All of our super chat donations. In fact, every profit on every dollar, every proceed, the proceeds we do on this channel do go to charity. So thank you very much. And I'll see all of you here same time tomorrow, noon. To the Moon starts at noon tomorrow. All right. See you guys. Have a great rest of your day. Bye now.